And we are live. Thank you for joining us for the first ever Rev review from RevTec. We'll be looking at the third quarter. We have a couple guest speakers today. So I'm Max Sherwood, founder of RevTec. Most of you know me from H2O Nodes Validator. We'll be joined today by Brian Smith from Jito Foundation, Brian Wong from Anza, and Gunor Narula from Placeholder VC as well. And this is following the Rev report, which we brought out yesterday, which looked at the third quarter, which of course ended on the last day of September, 2 days ago. And if you're interested in reading that report, you can go to revtech.fi and scroll down, and the full report there is on the bottom. So just to get on the same page, what are we talking about here? REV, or REV, stands for real economic value, and it refers to the combination of priority fees and Jito tips that are paid by users to prioritize their transactions and ensure inclusion of their transaction on chains. So when we talk about real economic value, we're talking about users paying for transactions on chain. The priority fees are Solana's native fee mechanism, which is inside the Solana protocol, which people can use. Jito tips are obviously built by Jito, which are outside of the Solana protocol, and is especially useful for arbitrage traders who can submit bundles of transactions to be executed at the same time. So the high level numbers from the Q3 report, we had $193 million of Jito tips and priority fees in Q3. That's down 22% from the previous quarter. Stakers took home 37% of that. Validators took home the rest, 63%. We'll talk about this a bit in a second. And the staker share notably also declined around 23%. So starting at a high level, we can see Solana in bright green here, zooming back all the way to last year when it overtook Ethereum in October last year. Had a massive Q4, massive Q1. It's down a lot since then, and also overtaken by Hyperliquid for the #1 spot back in June of this year, but still quite respectable numbers when we talk about triple-digit millions per quarter. So zooming into the quarter and Solana and the sources of REV, so we're focusing on Jito tips and priority fees. We see a lot of volatility here, which kind of corresponds to the noise in the marketplace and changing demands day to day. We saw that Jito tips at the beginning of the quarter made up more than half of the overall Rev share, but eventually came down, and priority fees are more or less remaining the same. So if we look at this as in terms of a percentage, the Jito tips have fallen from around half to below 30% by the end of the quarter of the REV on the network. So if we can hypothesize why this might be, if we look at DEX volume, which is arguably where a lot of the fee paying is happening, Sol stablecoin trades make up the majority of the DEX volume. That hasn't changed, but we can see the meme coin trading volumes have declined in purple. So if we look at this as a percentage of DEX volume, it's fallen from 40% at the beginning of the quarter to below 10% by the end of the quarter. So quite a significant decline in meme coin trading volume on chain, which is maybe an explanation for the declining Jito tips. But even if we combine both Jito tips and priority fees, the overall fees as a share of DEX volume has fallen from around 0.1% to 0.03%. So pretty dramatic change there. So if we look at why does this matter, Jito tips are earned by stakers through most validators. Most validators are sharing the large majority of their Jito tips with stakers, but that's not the case for priority fees. So when we see a decline in Jito tips, that corresponds to token holders or Sol stakers earning a smaller share of REV. So they used to earn over 60%. This is a zoomed out view all the way to the beginning of the year, and now they're earning less than 40%. I think this is maybe a little concerning because, as Solana grows, as more transactions happen, more people pay for fees. REV increases, but stakers aren't seeing that upside. They're not being included in that growth of the on-chain economy. There is a solution. Jito came out with an upgrade to their tip router, which is the mechanism that validators use to share Jito tips. So that upgrade enables priority fees to be shared as well. Yeah, that's been live since, I think, June or July. There's 3 validators that are currently using it to share 50% of their block rewards each. But those are all run by Jito. This is just a little website that I vibe coded called soulsharing.com, where you can track this. It gets updated every 24 hours. So we haven't seen a lot of adoption of the priority fee sharing via the Jito tip router yet. Of course, the longer term solution that will be enshrined in the Solana protocol itself is going to be brought into effect with SIMD 123. A lot of you will remember the governance vote that was a combined vote on this and the issuance reduction 228. So this did pass governance, SIMD 123. It's currently in the process of being implemented, and we're going to hear from Brian Wong from ANZA in a second about this, but this should be kind of broadly adopted by validators and staking pools when it does come online. So that's kind of my intro to set the stage. We're paying a lot of attention to REV and thinking about stakers' earnings, and we're obviously bullish on Solana. It's been an incredibly bullish 48 hours, even with the amount of announcements and things coming out. So we just want to make sure that stakers have access to that upside. So we're going to bring on Brian from Jito Foundation to talk more about the tip router. Hey Brian, how you doing?
Yeah, I'm doing well, Max. Thanks for having me.
Yeah, thanks for joining. So I guess just give us a bit of background on the tip router upgrade. Why did you guys decide to build that, and why now?
Yeah, so a few things. I mean, I think all of this actually started with Jito tips that were, remain a very significant driver of overall Solana REV, and really exploded in throughout kind of 2024. And so what it was is originally, kind of Jito tips were started as a somewhat centralized way to distribute those across various validators and stakers, which involve like a Merkle root, which is effectively, you can think of as like a database of like every single epoch, which is 2 days in Solana, who those amounts should go to and why. And that was a permissioned upload, so it was done by a centralized party. As Jito tips went up, that became a very significant amount of money that was dictated by a single centralized party. And so wanted more resiliency and decentralization in that process. And so that was the catalyst for the entire idea of building Jito's restaking platform. And the first kind of usage of the Jito restaking platform was distributing those Jito tips. So that is something that's called tip router. And it's a way, I think there's probably around 11 different node operators on Solana that are all reading this data from the chain every single epoch, upload what they believe that distribution of the Jito tip should be every single epoch, and then it has a process to distribute those out to validators and stakers according to the pro rata splits for each of them. Just like for a sense of scale, I mean, I don't know the precise numbers. It's quite volatile in Jito tips, as your chart showed, but I mean, there were upwards of like 15 million in accumulated tips per epoch. And so this like distribution was dictating how like $15 million per epoch would be. And so again, that's like a very serious amount of money. And so just making that in a very kind of protocolized, decentralized way so that there's no fallback, because like if you accidentally distribute, tips to the wrong person, like you're never getting that back, it's lost. And so just making sure that it is taken with the utmost care. And so that is the origin of Jito restaking and Jito tip router, which then led into priority fee router that I can kind of go through now, if that's helpful.
Yeah, please go ahead.
Yeah, and so it's the same kind of underlying logic, right? It's a lot of the same system, which is you're needing to detect how many fees are paid in epoch, what validators those are specifically attributed to, and then what is the commission that the validator wants to keep for themselves as wants to share with those. So all of the underlying system is, obviously speaking from like a non-engineer perspective, if you had like the protocol engineers on here that would build it, they would like go into all of the nuances and all the work they had to do to build it. But like from the highest level, like it's conceptually very, very similar to tip router. It's like, oh, we have this system in place. This was all back in kind of Q1 of this year. Priority fees, along with Jito tips, were insane amounts of money. There was a significant push to for validators as well as stakers to want access to that. We see that priority fees are still distributed to stakers, but it's either in single validator LSTs or it's in bilateral deals, and that's only available to like very large institutional stakers. And so that was also a part of the thought process, is that this shouldn't be reserved for large stakers. Like we want to democratize access to all of this. That's like the beauty of Solana. That's the beauty of blockchains, is like a retail staker with 5 SOL should get the same treatment as a large VC with 200,000 SOL. And the system is just set up today from an engineering perspective where that's not possible. And so it's like, we have this framework, we sub it in where instead of looking at Jito tips, we look at priority fees for the epoch. And then we have a way to enable validators, just one more tool in how they think about marketing themselves and building a relationship with their stakers. And so we built it out over, I think about 3 months or so, and put this into place. And then there was kind of the whole process of like intending to use this as part of Jito Sol, and then market conditions that change that I can get into if that's helpful, but also happy to kind of not bore your listeners with like too much of the Jito specific weeds.
I did want to ask about that, but first, I guess, why do you think more validators haven't just independently started using the tip router to share priority fees? Because I'm assuming, I think it's like 90 or 95% of validators are using it already for Jito tips, right? So why the hesitation with priority fees?
Yeah, I think the biggest driver of that is, well, there's like 2 things. So one is like validators are capitalist entities, and the operators would like to keep as much money as possible for themselves. I think that's just like natural, like kind of crypto is built upon those like kind of self-interested capitalist motivations. And so unless there is a business case that they can make about why they should do that, then the default will just be, this is a very good revenue stream for myself. I'm going to keep it for myself and pay out in other ways. And then the second underlying driver is related to that, which is priority fees were enormous sums of money in Q1 and throughout kind of Q2, and started to decline. And so in Q1, not to like offend the validators, but enjoy some of this call, but like validators were eating very, very well because they were keeping 100%. Though there's also 1796, which enabled them to not keep 50%, but 100%. So they doubled priority fees. Priority fees were absolutely printing. And it was a very meaningful, like back then, the yield uplift from Jito tips was like roughly like 2 to 3% yield uplift. So, right, if you think of like baseline Solana APY on inflation alone is like 7-ish%, like there was 3%. It was almost 50% increase in yield. And if you did the math on priority fees, like it was not to that same level, because you could assume like the baseline equilibrium of sharing will be lower, but it could have been like a 50 bips or more increase to staker yield. And so validators were arguably earning excess profits, and it was a meaningful amount to stakers. And so there was a very significant push from the staking ecosystem of like, I want access to these priority fees because it is so much money. What we've seen is that, in between when kind of that there was a JIP and Jito governance to have Jito Sol capture a share of these fees, and there's also just the general discourse. But priority fees started to fade throughout Q2 and remain at very significant levels in absolute terms, but at a significant decline relative to what we saw in Q1 of this year. And so the kind of social push to get access to those fees has just come down because validators are still doing very, very healthy on Solana, but it's not like the crazy numbers that we saw before. And if you distribute those profits pro rata to the stakers, the yield uplift, I haven't done the math lately, but like if you assumed even sharing 100% of priority fees, maybe we're talking in the realm of like a 10 basis point uplift for stakers. And so it's really just like this, what is the equilibrium rate for, is there a baseline of how much validators should profit? And is there something meaningful enough for stakers to actually change their stake in response to this? And what we've seen is that hasn't really happened. And kind of, so that the equilibrium, there was never the kind of activation energy. Like I think if we see a bunch of other validators opt into this and it was a meaningful driver of staker behavior because the yield was sufficient, then quickly you would see like a reset across the ecosystem and priority fee sharing would become the norm, like we've seen with Jito tip fee streams, as well as just like, you know, back in the day, like when we were here in 2021, like the default Solana validator commission was like 7-ish or 10%. And like now it's just zero off the board. And so you see kind of the social marketplace dynamics. And because priority fees have come down in absolute terms in a way that it may not drive that staker behavior, we haven't seen the market coalesce around what is a new equilibrium of like actually sharing these priority fees.
Yeah, 100%. That makes a lot of sense. So you mentioned that obviously you guys have the Jito Sol stake pool, and you mentioned that you kind of backtracked on requiring validators to share priority fees because the market situation changed. Can you maybe explain what happened there?
Yeah, no, I mean, it was, I think, just well, you're saying what happened, I guess, in terms of the market dynamics and why that impacted the priority fee decision, or like why like the market, like the priority fees like went down.
No, like you know, you've built the infrastructure needed for validators to share priority fees, but you haven't required it on the stake pool yet. Can you maybe speak to that?
Yeah, so there was a JIP that actually passed through governance to do this. But during the engineering build out of the process was when these market changes happened. And I think priority fees were down by 70% or something from like when that JIP was posted. And so it was really, and it was also, you know, validators, like not too surprisingly, were fairly against that proposal. And like we do care about validators earning healthy and sustainable income. And so validators were very unhappy about it. The incremental uplift to Jito Sol holders of this was not necessarily meaningful. And so it was just decided that by the community, you know, everything goes through governance, but there was a JIP that amended that decision and revoked it for the time being, that it no longer made economic sense with how the market had evolved to have this. I think the ideal mechanism is some sort of like kind of like auction dynamic thing. So like if the market, you know, booms again, hopefully through like Q4 of this year, then you would see like priority fee sharing ramp up because validators have like these excess profits that they're now sharing some portion of it. And then in periods that were quieter, like what we saw in Q3, then you ramp that down and you retain more of it. That was just harder to develop from an engineering perspective. And so that's not the system that was put in place. But I think that's actually like conceptually a model that makes more sense.
Yeah, that makes a lot of sense. If you think that it'll take a while, theoretically, for the market to ramp up again and priority fees to increase again, you know, if SIMD 123 gets implemented before then, will you guys kind of, you know, potentially require fee sharing via SIMD 123, or are you determined to kind of keep that within the tip router?
Yeah, no, I mean, I think that if there was a way in protocol to accomplish exactly what we are hoping to accomplish, then I don't see any reason from my perspective as a Jito contributor that we would like try and force people to use like a Jito system that has potentially incremental friction versus what is in place in protocol. I think it is still a little bit undetermined. And I mean, Brian, who's on after me from Monzo, will like have more detail. And obviously Justin Starry is doing like great work on implementing this, of what the end state of SIMD 123 is in terms of the feature set. I think a trend that we have seen over the last year, and we are likely to see more of, is more and more constituents in the kind of validator stack are trying to take some rev share on priority fees. Like you've seen that, I think, with Double Zero taking a portion of priority fees. Potentially you could see that with BAM, have a portion of priority fees. And so as you see like all these other constituents trying to grab this piece, like will the SIMD 123 implementation be sufficiently flexible to accommodate like a more and more esoteric of flow of funds from priority fees to the validator out to all of these constituents in different ratios, potentially variable ratios, all of that. And so I think there's still certainly optimistic that you know, tip router or priority fee router that we built out has utility. I think the timing, Brian will go over this in a second. I think the timing is still potentially a ways off for this actually being on mainnet. And so before then, helpful. After then, does it still solve some need for like maybe there's like a 10% bucket of priority fees that need to be stripped out and split out in a bunch of ways, maybe that would have utility. But I guess TLDR, back to your like original question, is like, if it is completely apples to apples, then I think would probably utilize SIMD 123 functionality and just whatever's in protocol for that, if it accomplishes exactly what the goals are that the community feels Jito Sol should pursue.
Yeah, and everything's a moving target on Solana, right? If it takes 6 months to implement something, things look very different after that period of time. So, yeah, I think with that we'll move on to the SIMD 123 topic. But yeah, Brian, thanks so much for joining. Thanks for building the implementation into the tip router as well. I hope we see more adoption on that, and we're gonna have more to share on how we plan on kind of being one of the first validators to utilize that soon. So yeah, keep an eye out. But yeah, thanks for joining, and see you around.
Yep, thanks for having me, Max. If any validators are interested in this, we've seen some more recent inbounds from it, so would love to talk. It's extremely easy to set up. We'll walk you through the whole process. We have it running on our own validators, been working for many epochs now, and so you guys should know where to find me or find Jito, and would love to have you on board and walk you through it. So, but thanks for this call, Max, and talk to you later.
Yeah, sounds good. Cheers, Brian. Okay, so we've talked a little bit about SIMD 123 already. So yeah, without further ado, let's bring on Brian Wong from Anza. Hey, Brian, how you doing?
Hey, doing well. I'm Brian from Anza, DevRel engineer here.
So yeah, SIMD 123. Obviously, we saw the governance vote way earlier in the year. I think it was in the springtime, March or something like that. And we haven't really heard a whole lot about it since. I think you guys have been in the trenches building, yourself and your colleague Justin Starry as well. So I guess can we just first of all get an update? Has there been any snags in the road on the way, or what's the latest from the trenches?
Yeah, I can talk about it briefly. So SIMD 123, essentially, I think Brian Smith touched on it briefly, but it's a native in-protocol way of sharing block revenue with delegators. And there was a governance vote even before I joined Anza back in March of 2025, where 75% of stake voted in favor of SIMD 123. I think the estimation for the completion time would be early 2026. If I had to estimate, maybe sometime during Q1 2026. So far, there are about 5 dependent SIMDs in order for SIMD 123 to take into effect. About two out of the 5 SIMDs have been implemented, and then they'll follow a traditional rollout pattern. First, get feature activated in testnet, and then roll out to mainnet. I can dive into the dependent SIMDs, or however you want to structure this.
Sure. Yeah. I mean, if you can kind of briefly explain, what the dependencies are.
Yeah, so SIMD 180, which is the leader schedule, which is keyed on the vote account, that's already been implemented. That's on mainnet today. So previously we had the leader schedule keyed on the identity account. There are some issues with this because you could have one identity account represent multiple validators. Where now the vote account, where now it's keyed on the vote account, so it's 1-to-1 with the amount of stake delegated to validators, which makes it a little bit easier to distribute rewards. There's also SIMD 185, which is vote state v4. So I think the distinction that we want to make here is there'll be 2 sources of revenues for validators. So one that's already in effect today is the inflation rewards. And then the second one is now being block revenue. So this includes base fees and priority fees. So we want to make those 2 distinct. We will allow validators to set commission rates for each, and also set up new commission collector accounts for where these rewards will go to. So that's in SIMD 232, which are allow validators to create these new system accounts for where the rewards will go into. And I think it's important to note here that despite these accounts needed to be system owned, they can now be system owned PDAs, which can now be controlled under a program. So there's a lot of flexibility on how you can use an on-chain program to customize how this block revenue will be distributed to delegators. And then the last 2 are pretty simple ones, but there's SIMD 291, which will allow validators to set the commission rate in basis points. So I think a common follow-up question is why. I think chatting with Starry, it's much easier to support this feature now. It'll require a few more bytes to support this level of precision, even though it doesn't get used too much. And as far as I understand, Jito Tips commission already supports basis points. So it's good to have feature parity there. And the last one being SIMD 249. So this is where this will allow validators to update their commission rate at any time, but these updates won't take into effect until one full epoch has passed. So that's about 2 or 3 days. And then at the same time, this allows stake delegators to redelegate their stake based on the commission rate. I think those are the 5 SIMDs. There's a lot I went over here, but we do have like a dedicated Discord channel in our Solana Tech Discord where you can talk to like the core contributors. You can talk to Starry if there's any feedback.
Nice. Yeah, I appreciate that. On the basis point front, so was it only possible to kind of set the fees in integers until now, or?
I believe so, or it might have been a feature where it wasn't very necessary. So I think it's just set through like percentages, whole percentages.
Right. Okay, that makes sense. And in terms of creating a new account for the rewards and kind of adding more composability generally to block reward sharing, are you guys building this with staking pools in mind as well, or Brian Smith mentioned that maybe the feature set is expanding. Are you guys kind of building this not only for validators but also for staking pools, or how do you anticipate this functionality being used once it's online?
Yeah, I imagine it's obviously this is a community SIMD, so it's up to the use cases of people who would intend to use this feature. So I think it is open up to staking pools. I mean, I think what's interesting to note here is that this introduction of allowing commission rates for block fees isn't limited to base fees or party fees. I think you can also introduce revenue sources that come from other non-block revenues that can also get auto-shared into the protocol during each epoch. So I believe even Jito tips could be distributed through this mechanism as well. So you can almost offer similar functionality as a tip router. And if you're a MEV platform, I think it might be a nice way to implement more sources of revenue sharing for delegators.
Interesting. Do you personally have any kind of prediction on, once SIMD 123 comes onto mainnet, will we see a total kind of shift in validator and LSP economics and fees, or do you think it might be more of a slow burn? I don't know. Is there a kind of internal view on what's going to happen once this hits mainnet?
Yeah, I think mostly 3 main things. So 1, obviously, I think delegator yields will go up. And then 2, what's kind of interesting here is validators will obviously need to adjust commissions. 1, to obviously attract more stake. But what's unique here is currently today, I believe validators set the inflation commission to 0%. But all the validators today keep all of their block rewards just because it's not possible to share base fees and priority fees. And I believe like this will change today where block rewards will be set to 0%. They'll be willing to share all of that with delegators, but maybe inflation rates will change a bit only because they're like a predictable source of revenue for operators. So for accounting purposes, this may seem like if you're denominated in SOL, this may work a little better for validator operations. And then the last point that I want to make, I think this makes validator operations a lot more transparent. So validators have greater emphasis on where these revenue sources are sent to their commission accounts, and then they have a transparent on-chain way to show where things will be distributed, right? So this can not only go back to delegators, but these revenue sources can go into wallets for things like public goods. And then like another idea that we had internally is maybe now validators can create governance systems where they can leave it up to delegators where they believe some of these commissions should go to. So really the net effect is like overall like more transparency and like healthier alignment between validators and delegators.
Yeah, 100%. The transparency thing is interesting because, I think Sanctum built this functionality into their LSTs a while back, and people are aware of it. And you can go to, the Sanctum site, and I think they automatically list the LSTs by APY, and you can see that some are, obviously much higher, and so that means they obviously must be sharing their priority fees. But there's no readout on, what that percentage is, and it's hard to understand how much of the APY is coming from Jito tips versus priority fees versus just the voting commission. That's also one of the reasons I kind of cobbled together soulsharing.com, which is using the Trillium API and Rated Network API, and shows you, what their commission actually is. So yeah, that transparency will be huge. And then the other point you raised about validators could, share all of their volatile block rewards, but increase again the commission the commission on voting. That's also something I kind of predict might happen. We might need to see the foundation delegation program amend their limits on fees, because right now I think 5% on voting and 10% on Jito tips is the limit, which is fine, if you're keeping all the block rewards. But if you're motivated to kind of differentiate yourself as a validator and share all your block rewards, then you might need to raise the voting. And like you said, the voting is a lot more stable. So validators who, have employees and have fixed expenses might prefer a fee on the voting, and might say, look, stakers, knock yourself out. If there's going to be a huge influx of more trading activity and more REV generation, then we'll give you all that upside. But for us, we'd rather have a percentage of voting, which is pretty much also what we're planning on doing. We're going to launch a validator in a couple weeks time, and we'll be excluded from foundation delegation program because of the limits on voting. But yeah, I'm just curious to see kind of how fees change, especially once SIMD 123 comes on, because until now you can only use the tip router. But
Right.
yeah, should be interesting for the entire ecosystem. I think also the fact that stakers aren't too aware of the changes in APYs and where those are coming from. Like Brian Smith mentioned earlier, that in Q1 we had staking APY going from 7 to, I think it was like 11 or 12%. The peak, of course, being like when Trump Coin launched, right? That epoch, I think we saw like 12% APY on Solana, which is something that we only really see on kind of the hyperinflationary coins. But the fact that there are so many real fees being paid that can boost the APY that much isn't really something we've seen on any other chain other than Ethereum. And the Ethereum chain doesn't produce anywhere near that much REV anymore. So I definitely see this as like one of Solana's strongest selling points, that we do have a source of like real real yield, if you want to call it that, and real economic value. So yeah, really looking forward to SIMD 123 and kind of just shaking up the whole validator landscape.
Yeah, cool. I mean, we're super excited as well. I think this is a good way to measure validator performance and sources of revenue. And so yeah, overall, just like very excited.
Cool. All right. Yeah, I think we will wrap this section here. Is there a place where people can, I guess, reach out? You mentioned there's a Discord for SIMD 123. Is that right?
Yeah, so there's a Discord. You can find me on Twitter as well. Yeah, I should. I see every message that comes through and able to connect you with like the core contributor if you have like important feedback.
Perfect. All right. Well, thanks for joining, and Godspeed with the rest of the SIMD implementation.
Cool. Thank you, Max.
Cheers. All right. So we're just waiting on our final speaker, Gunor from Placeholder VC. He wrote the paper Leveling the Stakes on Solana, which was released, I think, 2 weeks ago. And the paper looked at consensus mechanism Alpenglow upgrade, which people might be aware of. So I guess to kind of quickly summarize it, Alpenglow is a major upgrade to Solana. It's a consensus mechanism upgrade. And notably, it has some changes to validator economics as well. So currently, the validators have quite large voting costs, and voting refers to every block they have to make an on-chain transaction to attest to the validity of the current block being produced by the leader, whoever that is. So every validator has to make a transaction every block. Of course, the base fee to make a transaction is not very high, but if you're making one of those fee-paying transactions every block, it comes out to around 1 SOL per day, which 365 SOL per year is quite a significant expense. And for the large majority of validators is actually a larger expense than their actual hardware costs. So the hope is that when Alpenglow comes in, they'll amend the voting costs. I'm not sure if this has been decided or not. We'll ask Anor in a second once he joins us. But Alpenglow's been trying to find the balance between lowering the vote cost so it's not burdensome to validators, but also having enough of a vote cost that we prevent, sibling and other malicious behaviors where, validators would basically have no cost of joining the network and might be able to execute, attacks or other malicious behaviors. So I think we'll ask Anor kind of what the latest is on Alpenglow and the vote costs. But the other part of the paper dealt with issuance. So issuance makes up the large majority of the APY. For stakers, as we've kind of talked about, validators reduced their commission on issuance to 0 across the board once block rewards started increasing. But issuance has also been kind of controversial because of the governance vote earlier this year, where there was an attempt to lower the issuance, which failed narrowly. So I think with that intro, we'll bring on Gnor and we can maybe chat about this more. How are you doing?
Hey, all good, all good. Can you hear me okay?
Yeah, sounds great. Thanks for joining. So I was just giving the audience an intro of your paper, which kind of touched on, the two topics of Alpenglow and issuance. So I guess first on the Alpenglow front, has it been decided yet how much the voting costs for validators are going to be reduced, or is that kind of still up for debate?
Very much up in the air, I'd say. I'd hate to speak for the team directly, but last I viewed, I think there's this almost placeholder value of 0.8, or rather 80% of what the daily voting costs used to be, which used to be about 1 sol a day, right, for validators. And so I think the rough number that they've set, just for temporary purposes, are about 80% of that cost. And so that's already somewhat of a reduction. There is another, I guess, informal proposal by Max Sherwood of Anza that argues that we can safely reduce the validator admission ticket value to 0.135 sol per day. And that's based on some of his projections. I would say, though, that it's still a pretty open area of discussion that kind of welcomes an optimal solution. I think I'd be very interested with my co-author Mustafa to explore some of this too. We'll be talking with the team about it as well.
Nice. Yeah, 0.135 is quite a significant reduction. Is the hope that if validators have this big cost removed, that they can share more priority fees with stakers once SIMD 123 comes into effect, or what do you think will happen if and when those costs for validators decrease so much?
Yeah, well, I think it's a function of how the market reacts, right? But you'll have at the baseline, you'll have a lower break-even point for profitability. I think last I read, and y'all probably far better versed than this on I am, but a majority of Solana validators rely on Solana's delegation fund to remain profitable. And commission costs, for obvious reasons, because of competition market, go down to 0 incredibly quickly. And so when you have that dynamic at play, smaller stake validators, or not even smaller stake, just a majority of Solana validators, don't really have any other option but to pass through all value to their delegators. Hence the lack of profitability. But when you take out such a significant on-chain cost, you lower the break-even point, and now you have a little bit more expressivity with how you want to distribute your profits, and if you can take a cut in between. And that's kind of the purpose of our research is, look, we'll let the market decide what happens and what the settling kind of standards are for how much profit is shared, what the margins are kept. But the point being is that you have much larger expressivity of the revenue that you've earned as a validator. And a larger majority of those can have that choice rather than only the majority, or the super majority of validators.
Yeah, makes sense. And we just heard from Brian Wong from Anza, who's working on SIMD 123, and there's a lot of hope that having that ability on chain to share priority fees directly with stakers, and especially the transparency of it, will, allow validators, but also stake pools and other entities to, kind of have unique ways of sharing revenue with stakers. So that's something that we're definitely looking forward to.
100%. Yeah. And, for us, and again, that's kind of downstream, but it kind of rings true to the whole thesis of, with proof of stake systems, you have this very apparent positive feedback loop, right? Of more revenues generated, more profit captured, the more you can reinvest to enlarge your stake. And that leads very quickly to the discussion about stake equity, which has a direct impact on how decentralized and equitable a validator set is. And so more strides you take in increasing that equity for all sorts of validators, I think the healthier a system becomes.
Yeah, and your paper really did show that the largest validators actually earn most of their revenue from issuance, which is something I didn't realize. So maybe we can go there with issuance. I guess first of all, do you think that we'll see another governance vote like SIMD 228 this year or early next year? Have you heard if there's an appetite still in the community to reduce issuance significantly?
I'd say, again, wouldn't want to speak for anyone officially, but I would say there's almost a 50-50 split, right? In which, and again, I'm by no means affiliated with Solana, but just my reading, I guess, of the temperature, where on one hand, and we kind of explored this in our piece too, is that if there is consensus that we do want to decrease the inflation rate or the inflation schedule for Solana, there may be an appetite for it with something like Alpenglow. The reason for this is because now that we've lowered the barrier of entry for profitability, suddenly you can digest as any type of validator a lower inflation schedule, because now you aren't reliant on either issuance for profits or you aren't reliant for high enough issuance to pass through to your delegator to remain an attractive validator, right? And so suddenly there might be an appetite for that, just because there are other forms of cost saving or revenues, namely the validator admission ticket being much lower than the on-chain voting costs. On the other side, though, there are dynamics with DATs and how institutions are underwriting SOL as an asset, and the ability to passively stake and earn an incredibly high yield rather than figure out how to interact on chain with DeFi mechanisms and other yield protocols. It is much easier to passively stake and earn that yield. And so there is an argument being made there. So I think it does come down to, if there is kind of a sentiment or emotional consensus by the Solana community to really champion a lower inflation schedule. And if so, I think it will happen because Alpenglow makes that much more of a likelihood. But of course, it all does also come down to what the focus points of the Solana ecosystem are. And if those kind of remain more focused on, let's say, performance or infrastructure upgrades, issuance is something that may fall by the wayside, and it will kind of continue as it is.
Yeah, interesting. Interesting to think that Alpenglow might be a good time to revisit an issuance governance vote. I mean, I think last time having both governance votes together turned off a lot of people because we were voting on, kind of two different things at the same time, and maybe your opinion on one thing would change if the other thing flipped yes or no, but you didn't know how each vote would come out. So it felt a bit chaotic. But knowing that Alpenglow is coming and when we have certainty around, the reduced costs for validators, yeah, that might be an opportune time to revisit the issuance topic. So that's something that's interesting to think about for sure.
100%. Yeah. If there's one thing that people take away from this is that Alpenglow is almost a saving grace for a proposal like 228.
Yeah, interesting. And by the way, do we have any estimation on Alpenglow ETA? I mean, we're still pretty early in the process, right?
I believe so. Yeah, I think the last time I was able to hop on a community validator call, I think rough estimates were about at least half a year, right, for implementation, just because I think there's integrations with Agave, and then there's the whole Firedancer, Frankendancer stream that's kind of operating independently and will have to be upgraded too. It makes sense. It's a consensus upgrade. It's an all or nothing type of situation. But it is really cool to see that there are such a smart group of people working on it, and it will really beef up Solana is not only on the performance side, but as we kind of measured, even the baseline Alpenglow without any changes to issuance definitely makes a dent in the positive side for Solana validator set equity and decentralization.
Nice. Yeah, and if anyone hasn't checked out your paper yet, they should definitely give a Google for leveling the stakes on Solana, published on the Placeholder VC blog, for sure. So yeah, I think we'll wrap this section here. Thanks so much for joining. Unfortunately, Mustafa couldn't make it today, but shout out to your co-author as well. And yeah, let's keep in touch and onward and upward for Solana.
Awesome. Thank you, Max. And yeah, shout out again to Mustafa. But appreciate you having us on and letting us share some of our insights.
Sure. Thanks, Gernard. Cheers. All right, so we're coming up on time here. We're going to wrap soon. That was I guess three different great conversations with Brian Smith from Jito Foundation, Brian Wong from Anza, and Gnor from Placeholder VC. We've touched a lot of ground. Again, based on the Q3 Rev report, which we released recently on the RevTec blog at revtec.fi. You can find that. You should also follow us on Twitter at RevTec_fi, I think, to keep up to date. If you've maybe picked it up in the conversation, we're planning on releasing or launching a validator which will share 100% of priority fees and 100% of Jito tips with stakers. It'll have a slightly higher voting commission, which we think will become the norm, as we've mentioned. But our long-term goal is to launch a staking protocol with 2 liquid staking tokens, which acquire the yield from REV and issuance separately. So if you're just interested in earning REV and doing so in a much more capital efficient manner, you can hold Rev Sol is what we'll call it. If you're interested in earning issuance, which is a bit more stable, you can hold ISS Sol as we'll call it. So we built the smart contracts for that. They're currently under audit. And yeah, you can expect us to start releasing that application later this year. So yeah, catch us at Breakpoint and ask to get on our wait list there. So, but yeah, the overall idea driving this push is that Solana is one of the few chains with a real yield, with a number of users paying hundreds of millions of dollars a quarter for transaction fees. And we see that as incredibly bullish for Solana. The staking APY doesn't have to be made up of entirely inflation. We can attract new types of investors to Solana who are interested in real yield. And by adding differentiation to the staking yield, we think that we can attract new investor profiles and generally strengthen Solana. So that's what's our motivation, to align stakers with Solana's success and growth, which we are very bullish on. So thank you for tuning in to this live stream. I guess we'll probably do something similar at the end of the next quarter. It seems like a good cadence, putting in the research quarter by quarter, looking at the REV. But yeah, thank you for listening in, and see you next time.